Welcome back to This Week in the California Housing Industry, where we help California housing industry professionals stay on top of what is happening out there in the market today. So we're going to take a look at three articles, starting off with how California's housing market remains sluggish in March. Number two, how the Middle-Class Homeownership Act has qualified for the ballot. And number three, how California built more homes than people over 6 years. So why is housing still tight? Let's dive in. So starting off with the slow march, this is an article from the California Association of Realtors, which is a very good partner. So the thesis driving the article is that the California's housing market retreated in March as the Iran conflict, surging energy prices, and financial market volatility kept potential home buyers and sellers in hibernation mode. So looking into some of the data that the article presents, closed escrow sales of existing single-family detached homes in California declined 3.5% in March and fell 2.5% on a year-over-year basis for the third straight month. Also, March sales remained below the 300,000 benchmark for the 42nd consecutive month. A 3.5-year trend is a significant data point, so that is something to clock as we move forward. Also, so following its traditional seasonal pattern, California's median price increased 7.1% through February, which was in line with the average 7% increase in price movement observed between February and March over the past 20 years. Also, March's price gain of 0.4% from a year ago was more moderate in comparison to the monthly increase, but was the second straight month of positive price growth since the back-to-back dip in January. The article presents that data, also the logic to help make sense of the data that it's presenting. So the logic presented in the article is that March home sales were subdued as higher mortgage rates and stock market volatility kept many buyers on the sidelines, which is from the California Association of Realtors president. They go on to say that as both geopolitical tension and interest rates ease for the third straight week, buyers and sellers who have been taking a wait-and-see strategy could return to the market if the conflict in the Middle East continues to stabilize. Essentially, what the article is saying is everything has slowed. So listings, sales, the entire market has frozen to just not really moving very much. And what they're trying to make is an overly simplistic argument that this is due to conflicts overseas, which are impacting mortgage rates here. So our analysis here at the California Housing Collective is that the article just vastly oversimplifies the situation. Inventory should remain low in the near term, midterm, possibly in the long term. And why? So investors keep buying 20 to 25% of available homes. Prop 13 continues to disincentivize people from listing their homes and moving to other properties. And then as a long-standing trend that we are continuing to track, there's just not enough new construction. All three of those forces should keep inventory low in the short term and the near term. But demand, on the other hand, should also remain low. Rates should remain relatively high. Kevin Warsh, the new Fed chair, has said that he's going to try to reduce rates as much as possible, which cannot be done solely by the Fed chair. So I do not expect him to have much success in that endeavor. Also, prices are too high for many. So if you look at throughout Southern California, especially, also other parts of California as well, just the price of new homes is just out of control. And then out-migration. So out-migration, for what has been publicized, is negative. So we have more people leaving the state than moving into the state. One of the long-standing trends with California is that there are a lot of undocumented folks here throughout the state. And the rumor or the prevailing thought is that the out-migration with the undocumented is even higher than in documented folks. So if inventory remains low and demand remains low, why would home sales start to spike or start to increase just based on a conflict in the Middle East? I'm not expecting any movement or any thaw of a frozen housing market. The second article we wanted to take a look at is also from the California Association of Realtors. The thesis is that the Middle-Class Homeownership Act has officially qualified for the state's November ballot as part of a campaign to build new housing and make homes affordable for middle-class Californians. Digging into the measure, so this measure enables middle-income Californians to purchase a new home with only 3% down. If that sounds familiar, similar things were introduced right before the last crash. So keep that in mind. So while spurring a wave of new home construction at no cost to taxpayers, which is largely true. To qualify, homeowners must, or home buyers must be California residents, meet minimum income requirements, pay at least 3% down, make monthly payments, and occupy the home as their residence. Protections include fixed low-rate interest rates, with strict limits on bank fees and no penalty for early payout. That mostly sounds good. We also want to dig into some of how they're freeing up these funds. So the measure authorizes $25 billion in revenue bonds to provide low interest down payment assistance loans to eligible Californians, which would protect taxpayers by requiring bonds to be repaid by investors and home loan borrowers themselves. This could theoretically help address California's housing affordability crisis by incentivizing new single-family home construction and increasing the supply of new homes, which could also theoretically fuel construction of approximately 190,000 new homes, which sounds wonderful. But let's dive into the analysis here from the California Housing Collective. This measure likely will increase housing costs for California in the short term and the midterm. Why? So demand should increase slightly. Again, the housing market, among other things, is largely a supply and demand driven market. So if demand increases, and the reason it would only increase slightly is because this is only available for new construction. You can't buy an existing home off of this 3% down payment afforded through these revenue bonds. But it's also available to current homeowners, but unlikely to be used by them. The reason why is because most current homeowners have far more than 3% equity built in their house unless they bought in the very recent past. So I would not expect this to be used by current homeowners, even though the measure doesn't preclude them from using it. Now, inventory should be unaffected. This is one of the biggest, is why this measure should get popular support, is that it's going to create 100,000 or 190,000 new homes. That is largely unsupported by the measure or by rational analysis. Inventory should be unaffected. The reason why is the publicized increase in housing supply is theoretical or based on trickle-down effects. The thought process is if there's a new supply of funding only available for new construction, there will be more new construction. However, if you look at where developers are spending their money throughout the United States, it is not in California. The likelihood is that maybe a couple more homes are built because there's this new supply of funds available in the state of California. But the larger developers who would actually put in a large number of units are going to continue to stay out of California. So demand increases a little bit while inventory or supply doesn't actually move. If those two outcomes do come to pass, prices increase rather than decrease. Now, let's look at the last one. So Fox Business posted an article. The thesis behind it is that the California housing market has seen an increase in inventory while the state's population growth has slowed. But strong demand stemming from long-standing scarcity has kept the market tight. So getting into the data behind this, this actually comes from the Public Policy Institute of California, which found that the state of California added 677 housing units over a 6-year period. And during that period, California's population only grew by 39,000 residents. So you have 677,000 more housing units with only 39,000 more residents. In theory, that should help alleviate the long-term inventory issues we've been facing in the state. It goes on to say that despite the relative growth in the number of housing units available, vacancy rates have remained tight, with PPIC finding that owner vacancy rates actually declined from 1.2% to 0.8%, while the rental vacancy rate was 4.3% in 2024, which is well below the national rate of 5.9%. The data goes on to say that PPIC's analysis also noted a demographic trend that's affecting California's housing market, with average household sizes declining in recent years. It found that California lost 82,000 households with children and gained 722,000 households without them. And this is over a 5-year period. This is fascinating. So I am not a demographic expert. I don't really follow birth rates or those sort of trends, but we are going to try to dive a little more deeply into them. So the logic behind this shows that even though the state is adding more housing units than people, it was in such a deep hole that the recent successes in home building are not enough to truly move the needle. 100% true. Couldn't agree more with the article. The state's longstanding shortage of housing units will require more construction to get inventory levels closer to the market's equilibrium, as the state will need 2.5 million additional homes. I couldn't disagree more. So let's start taking a look at some analysis. Here's a chart that I've never looked at before. It is interesting. It shows the number of births per 1,000 women aged 15 to 44 from 1909 to 2023. So that's what, a 114-year period. Without going into the numbers specifically themselves, in the early 1900s, right up until the Great Depression, you had a relatively high birth rate. After the Great Depression and into the Great War and the post-World War II boom, you had a spike in the amount of births per 1,000 women. And since then, in the 1960s, 1970s, down to 1980, you saw a dramatic decrease, which mirrored what we saw from 1910 to 1930, and then just a steady decrease since then. What does that mean? Personally, I just find that information fascinating that we're having fewer kids. This is in California, the United States, but it's also a worldwide trend. I don't fully understand it, and I don't pretend to. But how does this impact the California housing market? So if you look, of the roughly 9.5 million single-family residences in California currently, roughly 2.1 million are long-term rentals and roughly 1.1 million are vacant, that are just sitting out there being unused. Now, that study that was cited earlier, where there's 2.5 million housing units required to help the market meet equilibrium, their thought is that in order to get that 2.5 million, you need to build more houses. But if you look, there are 3.2 million that are already built that could be returned to the market in a more useful way through legislation. I've talked about this 1,000 times on this channel. I will continue to do so. So if we were to be able to repurpose existing housing inventory to better meet the needs of Californians, we could solve the housing crisis fairly quickly by making those units available. Looking a little bit deeper into more analysis, so more new construction alone is unlikely to solve the problem. And the reason is, if you go back to the data that we shared previously, roughly 1 in 4 new houses would be bought up by an investor. If you look at the percentage of homes that are owned and then owned by investors or non-owner occupants, the data suggests that somewhere between 30% to 50% are unused by families who would choose to live in them. Which means if you were to buy if you were to build 2.5 million more homes, roughly 1.25 million of those in a typical market like we have today would not actually go towards solving the housing crisis. So you have to build twice as many homes as you need to in order to actually meet the needs of the California housing community here. Now, policies targeting a reduction in non-owner occupied single-family residences are more likely to deliver quick, sustainable results. Also, smaller homes, ADUs, and condos are likely to rise in popularity since California has lost 82,000 households with children like mine, while gaining 722,000 households without children. If you're a single individual looking for housing, you don't need 3 bedrooms. You don't need 4 bedrooms. You might just need a studio or a 1 bedroom. And as the Californian demographics change, the types of homes that we're bringing to market through new construction should change alongside of it. That's all we had for today. Thank you for watching. We'll be posting another video like this next week, but please stay tuned. And if you are a California housing professional who is looking for more information like this, please connect. There'll be a few links down below. If you have any questions, any pushback, please leave a comment. Thank you. We'll see you all in the next one.